Good morning, traders, and welcome to Traders Corner's 7th Annual Thanksgiving Investors Summit. I'm your host, Anthony Chapman, and we're thrilled to have you with us for what is truly one of the most opportunity-rich trading weeks of the year. With volatility surging across stocks and options, today's summit brings together a hand-picked lineup of top strategic trading mind experts who will show you exactly how they're identifying, navigating, and monetizing today's fast-moving market conditions. From breakout patterns to option setups to institutional flow to chart-driven precision trading, each presentation is packed with actionable insights you can put to work immediately. We'll be running sessions all day and after each speaker. You'll also find exclusive Black Friday specials that are once-a-year offers available only to Summit attendees. I'll be placing those links in the chat after each session. So let's get started. Our first presenter is known for her decisive, high-precision approach to reading gaps and tracking the flow of institutional money, and we are talking about the great Melissa Armo of the stock Swoosh. Today, she'll show you how to identify the gap patterns institutions rely on, why volatile conditions make these setups especially powerful, the key signals that reveal high probability directional moves, and how to trade them with confidence. So everyone, please welcome Melissa Armo.
Good morning. Can you hear me?
Good morning, Melissa.
Hello. Welcome, everyone. Great to be here today. Well, today I'm going to talk to you about trading on the side of institutional money for success. So it is a good time to get prepared really for 2026. I mean, again, it is almost December. Monday is December 1st. We have what's going to be a very interesting month because of the Fed meeting. But we pretty much are through, I think, the most of the volatility of the tariffs that happened this year in 2025. So I think we can go into December really focused on interest rates, what's going to happen with that. And of course, we still have earnings. We have retail earnings in December. I do a lot of earnings trades. And again, I focus on gaps, and that's what we're going to talk about today. If you're interested in more information, you can email me at melissa@thestockswoosh.com. Again, you can call me at 929-3200-GAP if you have questions or if you want to sign up for any of my classes at the end. But like I said, I'm really in my mind wanting to close out 2025 really strong and then prepare, mentally for 2026, getting organized. Do I want to increase my risk for next year? All of these things. What did I, going back and reviewing my year, could I have done better? Could I make some changes? This is the time of the year, again, it's the holidays, taking a couple days off myself here with Thanksgiving tomorrow, and really kind of reviewing what I accomplished this year and what can I do better next year. So again, if you're one of these people that you've been trying to make it trading for a while, and you can't seem to ever get some progress, like where you're taking, 8 steps forward and 20 steps back, where you're really not making money and moving forward. You've got to get out of a rut. If you're trading and you are not profitable, and again, it's 11 months into the year, then whatever you're doing does not work, and you have to change. You have to change, and it's okay to change, and change can be scary, but we have to do it. So again, why are you here? Maybe you're here to learn more about what I do. Maybe you're here to learn, just about trading in general, how you can make money, how you can trade for a career. But really what I do is based on a lot of common sense. I am following the moves that institutional money makes in the market. Then I am capturing those moves on a small time frame in a small period of time daily. So again, we're going to go over what a gap is in a minute. But when I'm saying institutional money, I mean hedge funds, big banks, large traders, professional traders that move stocks. So for example, today is not a good day to trade, okay? People are off, it's the holiday. You're not going to get institutional money moving any stocks today. You're going to get fake outs. You're going to get something that looks like it's going up or looks like it's going down and then doesn't have any follow through. So on days like today and Friday, where the market's only open a half day, you don't trade. There's not ideal conditions, and the market's closed obviously tomorrow. So I want to trade when the conditions are ideal. So I developed a system called the Golden Gap. It's one system that I use every single day that I trade to make money in the market. Now let's talk about what is a gap. A gap is the difference between the close and the open. This is a daily chart. It's a chart of BA. Stock closed here at 4 o'clock and closed at one price and opened lower at another price. So what happened? it gapped down. Okay, so there are gap downs and there are gap ups. What's a gap up? This is a gap up. Closed here, gapped up. Closed at one price at 4 o'clock. The market opens at 9:30 and opened higher. Rallied. Okay, so this is an example of a gap up. Now, we happen to short BA. We did a bunch of shorts in this. We did quite a few shorts in this in October and November. And again, the stock sold off. This was a really nice short. We did puts in it too. So here was a put that we did in BA. We did the 210 puts that I called 1029. I just want to show you here, again, this particular day, which the stock gapped. So it closed here, gap down, and I bought a put. Now, when I'm trading options, I'm buying the put to enter it and selling it to exit it. And again, we did the 210s. You can see where it went. Do. Came all the way down, boom. Fell, broke 200. This is within the time of the trade. It expired on the 7th. This was a nice trade. So again, this was a 410% return on investment. One of the benefits of doing options for me personally is that I can hold for longer moves and bigger moves overnight. I know people want to trade options because they can, trade options without a margin account, but really the larger benefit and the greater benefit is that you can capture bigger moves with a fixed risk. So again, this is an advanced trader risk. I'm going to show a beginner risk in a minute. You could have paid $275 for one, could have spent $275, and you still could have made over 400%. So I risk an advanced trader risk. I risked $96.25 and I made $39,375. I get out of it on the 5th. Okay, so it's about a week. We're doing the weeklies. If you risk $13.75, you could have made $56.25. This is a huge profit for someone particularly with a smaller size account. I'm saying beginner risk. Again, you could have done one. You could have done two, and you could have day traded this, which we did as well. But as I was saying, that move in BA, okay, was made with institutional money for whatever reason. Who knows why? It doesn't really matter. I don't care. Whatever the reason is, people dumped it, okay? They sold the BA. So opportunity sets up daily and gaps, and that is very important if you want to trade for income generation. Whether you're doing this full-time, part-time, if this is something that you want to do, I'm not a long-term investor. I tell people I'm not a swing trader. I'm not a long-term investor. I'm looking at stocks to get in and out with a move, okay? And I focus on shorts. I prefer to short, but I will go long. But I'm looking for a fast, quick move, okay? That could be in a day, could be in 5 minutes, it could be in a week in an option. That's still fast. I'm not buying the stock and holding forever. And in this type of market, honestly, you could get killed doing it. Now, this was actually, this is 1 week in a row. This wasn't last week. This was 2 weeks ago now. From the 7th to the 13th, I'm going to go through every trade here that I did in the live room. Okay, profit was $42,740. And again, this is just an example to show you, if you want to day trade, you have to have a margin account. You can trade with a prop account. But again, day trading or options or both, I like to do both, there's moves in the market. And if you don't have a lot of time, the fast trades, the day trades are the trades for you. So we did here on the 11th, okay, or no, the 7th, I'm sorry. We shorted the market, 11.7. Why? The market closed here, gap down. This is a QQQ, this is a daily. We got the drop, boom, got in, got out. Here was the trade. I shorted this at 607.05, boom. Got out at 599.25. This was a huge trade. The market fell and crashed this day. And so again, you would have had to have a margin account to do this, but if you didn't, you could have bought a put. We did puts too. Okay, we did puts too. So you could have bought a put, and they have daily put expirations in the queues, and you could have got in, got out here too. And that was a really nice trade. And again, I could have even held that a little bit longer there. So that was the one day. Then we also, we did the BA that day too. We did the BA that day too. Here was the 7th. Closed here, gap down, open, dropped. Again, this is a short. Okay, this is a short. This is a day trade. Enter the short at 195.25. Boom. Got out, got the drop, $2, 193.30, made 87.75. Again, you could take 500 shares. You could have taken 100 shares. Either way, it's a $2 drop. Now, again, could have done this prop, could have done it as a margin account. Like I did here, you could have bought a put. Again, we've been doing puts in this. But again, if you did not want to do the day trade on margin, you could have bought a put and got in, got out, done, boom. So again, what happened here? The BA fell. So people shorted it and they dumped it. They sold it. Again, why? I don't care. It's the point of making money. And how do you make money? You got to get the direction right. You're going to lose in trades if you don't get the direction right. And that's one thing that people are going to start to find trippy and have since actually October. So from October till November, up until like the end of last week, again, I'm discounting this week because it's a holiday week, people are struggling now, and I'm generalizing here, active traders, retail traders, because they were buying every dip for the 6-7 months of the year from April up until about September, and it was working for the most part. That's off now. That's not working now the last 6-7 weeks. So, and it's not going to work the rest of the year either, by the way. So again, I developed a system and a strategy where I'm focusing mainly on shorts, and I'm shorting in a bullish market. I'm shorting in a bearish market. But again, it's very beneficial when the market turns because the market helps shorts when it goes. Amazon was the 10th. We actually went long this. This was actually a long. This is a bullish gap. Stock close here, gapped up, rallied, boom. You could have gone long this, okay? And again, you could have bought a call, entered it. Again, this is a day trade, 249.30, boom. Got $1 plus, out, done. Made $3,000. Again, you could have bought a call and got in, got out. Then on the 11th, we did NVIDIA. We've been loving NVIDIA. Loving NVIDIA. This was a short. Stock closed here, gap down, open, fell. Okay, NVIDIA's tanked here. And you could have shorted this right in here. 194.50. Again, I'm usually trying to get $1 or more. I'm happy with $1. 193.15, fast trade, got in, got out. Made 47.25. Again, how do you put together a week? How do you put together a month? How do you put together a year trading? You chunk it. You chunk it out. You take a trade, get the move, get out. It's not trading all day. My trading room opens at 9 a.m. We start trading at 9:30. I'm done by 9:45, 10 o'clock, 10:15 the latest. Like, I'm done. I don't mess around. I don't keep trading. I understand that the odds are against me. The more trades I take in a day, the odds are against me the longer that I'm in the market as the day goes on. You have all kinds of things happening. Economic news, White House press conferences, Trump tweets. When you're up money in a trade, it's never over to the fat lady sings. You have to take the profit. I'm telling you, fast trades is the key, okay? And any questions here as I'm talking, you can plop it in the room. And then on the 12th, we didn't do any trades. And then we did NVIDIA again. This has been a good one. Closed here, gap down, fell. This is the 13th. Again, another short. Shorted at 190.70, exit 189.60, profit 4,400. Beautiful short, the NVIDIA. And again, for 5 days, basically an average week here, 42,740, and my average risk for trade is about $4,500 a trade. Again, these are margin trades. If you want to do options, again, I'm doing options. I showed you the earlier trade, but again, you could do my day trades as options if you want to, and some people are doing that. But the point is that, again, I'm looking for select criteria. I'm looking for certain stock picks. I'm looking for a stock to have certain criteria for me to take the trade. If it doesn't meet those criteria, guess what? I don't do it. Or I don't do anything that day if I don't find anything that meets my criteria. And again, that's part of it too. Like one of these days in here, we didn't trade. Any questions here this morning? How are we doing? Hello, is anyone there? But again, getting back to what I was saying, you put the odds in your favor. Using a high win ratio system is the best chance for success, because otherwise it's a 50-50 crapshoot, or you're looking to get a move with the market. Now, with the market power trends, which we've had some power trend bullish days in the market this year in 2025, we've had some very, very powerful power trend bearish days in the market in 2025. If you look back from January to now, there's probably been more power trend days this year than any year that I can think of in recent history. And we made more brand new all-time highs probably in recent history this year. And we didn't hold all of them. But the fact is that it's rare to have power trend days in the market. Somebody's asking a question. I only trade gaps. The criteria that I'm looking for that someone asked is what I teach in my class. The class is a paid class that I do once a month. I'll talk about it at the end. But the class for December is 13th and 14th, and it is a 14-hour class. That is where you will learn the criteria. Today, we're just talking here for 45 minutes to give you just some basic information to see if you have any interest in anything that I'm doing or want to ask me questions, since I'm here with you live. I'm here with you live today, the day before a holiday, for you to ask me questions on, you know, my strategy gaps or the market or anything you want me to look at. If you want me to look at stocks, we have time at the end. But I teach the criteria in a paid class. I only trade gaps though. One of the reasons for my success, again, I started trading in 2008. It took me 3 years to figure out my system, but trading now for almost 18 years. It'll be 18 years soon. But again, one of the reasons for my success is for myself personally and the people that come to me and take my class, and then the business that I've had now for, you know, for 15 years, is that I only do one thing. I don't profess to be an expert or a jack of all trades and all kinds of things. Like if you have certain, you know, if you're following trading educators, they teach futures, they teach Bitcoin, they teach crypto, they teach options. I just do gaps. That's it. That's all that I do. And whether you want to do it as an option or a day trade is really up to you. Again, I do both just so I can hold a little bit longer in an option. But I didn't do options actually when I started trading in 2008. I didn't trade options. I didn't start trading options like 2014, 2015. I've been day trading though since I started. The options are sent as newsletters, which goes to your email, which is a service. The room, you got to be there live. You got to be there live to take it. Set your levels. I don't know what you mean by that question. You'd like to know the best way to set your levels. I don't understand what you mean by levels. If you want to explain that. But we were talking about making money at the beginning. Obviously, everyone wants to make money. Costs are high. Interest rates are still high. Inflation is still high, as far as I'm concerned. Now, it might have gone down in the last 12 months, but we're not seeing 2019 prices. You know what I mean? We may never see 2019 prices again, which kind of stinks, and we don't even know if we're going to see interest rates go back down where they were before. I don't know. Again, that's going to be really on tap. The meeting for the Fed, I think, is not this week, but the following week. Yeah, it's a week and a half away. No, yeah, it's 2 weeks from today. Actually, 2 weeks from today is the Fed meeting. Today is Wednesday. So again, everyone wants to make money, especially around the holidays, because we want to spend money, we want to buy presents, and we want to enjoy ourselves, and we want to take some time off and rest and relax and eat, drink, and be merry, and we don't want to worry about money. And so again, that is the goal, is to trade, to make money. I think a lot of people sometimes forget that because they end up getting involved with trading and they get involved in a trading community and they get into this. But if you're losing, that's not fun. Actually it can be very stressful. So again, talk about what I was saying. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. A big flow of money going a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of the power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Justine is asking about setups. Well, again, you have to take my class to learn how I'm making the stock picks. But if you're asking me what's the best chart to view everything, it's the daily chart. The daily chart, you get all the information you need from the daily. So that, if someone said to me, Melissa, you can only trade with one chart for the rest of your life, it would be the daily chart. That is key, okay? So again, becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. Learning advanced technical analysis is required to be successful because price is really what counts. What does this mean? It means reading price action and charts. Again, you need to do that. You need to have charts. So it's technical analysis. I make decisions based on technical analysis, not on fundamentals, not on what somebody's tweeting, okay? Not even on what the Fed's going to say, because who knows what the Fed's going to say. The Fed could say, we're going to drop rates 0.25%, and the market may fall. It may not react positive to that. Do you know what I'm saying? So you can't always buy into it. It's the same thing where you could have great earnings in a stock, and the stock could crash. You say, wait a minute, the earnings were fabulous. Why is it selling off? Sometimes it doesn't add up to that with the fundamentals, and that's why it's really important to learn to read price. Comprehending how to redefine and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. And I'm telling you, if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. And that's what I teach in my class. Knowing how to read what institutional money looks like is essential to become a successful trader. It's like I'm predicting what's going to happen next. I'm not predicting the gap. I'm predicting what's going to happen next. You can win big trading on this side of the power. You can make money in the market if you know what to do. Many people don't, or they get sucked into bad trades or not focusing. So just don't do that. I'm going to try to bring up my chart here. Can you see, without me clicking on and off, the SPY? I just want to show you one thing quick. Can you see the SPY? I'm going to go to NVIDIA here. So I was talking about predicting. Just pull this up here. Again, I'm not predicting what somebody's going to get. Like, you know what I mean? But I'm not predicting what the Fed's going to do. I don't know. You can make estimates, but you don't trade based on guessing or, crapshoots. You look at it and make a determination based on the chart. So I'm going to go back here. This was 11:20. NVIDIA had earnings. Let's blow this up. So NVIDIA had earnings and gapped up from 11.19. It closed at 186.52. Boom. Open at 195.95. This is NVIDIA, and it gapped up on the earnings. I did not go long it. A lot of people were going long. If you follow this, everyone's excited about NVIDIA. But the stock failed on the gap up on the earnings. It actually sold off. A lot of people wanted to go long that, and I'm generalizing here. A lot of retail traders, again, I appear on television. I talk on Fox and other channels too. In fact, they asked me to be on Newsmax tomorrow for Thanksgiving. I said, no, I want the day off for Thanksgiving. But everybody was really hyped to go long this stock after the earnings. And I'm not going to deny it. The stock was up $10 on the earnings. There it is. You see it. It's right there. But I didn't go long it. And I thought, you know what? If it goes, it goes. And then I'm not going to get it. I didn't lose money. I didn't make money if it goes up. But I didn't like the gap. Why? Because I used the criteria that I have in my system, and I rated the gap as a bullish gap. And I said, no, this isn't good. This isn't good. And so I didn't go long it. So again, you can't go long every gap up, even in an uptrend, which this is. And you can't short every gap down. And you can't go long every gap down, and you can't short every gap up. Like this could have held. This could have. But I didn't like it. And it didn't rate good. So again, making decisions based on what's happening actually in the price is critical. Because again, actually, you could look back and say, whoa, the earnings were good. This makes no sense or whatever. But it fell. In fact, it crashed. You see it? That was Mungo bar. In fact, in 2 days, it went from 196 all the way down. It fell 20-some points in 2 days. That's a big move. Okay? So it's extremely important to look at the chart, make a determination based on the gap, which is what I do based on the direction. And how do I do that? Again, with the rating system. I use one strategy to trade. One strategy, one focus. This helps keeps me focused, and it's called the golden gap. So again, what is the gap? A stock gaps in the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Almost everything gaps then. So how do you know if it's going to go? How do you know if it's going to have a big move? How do you know if it's going to hold the direction? How do you know if it's a good gap or what I call a golden gap? You don't until you rate it. And again, I teach the rating system in my class. But again, this is another example here. This was Amazon. Stock closed here, gapped up. This was back in the earnings. This fell too. Here was the day we went long this here and this pop up here in November. But again, this is a bullish gap, and here is a bearish gap. So there's all kinds of gaps. Here's another one here. PLTR is a popular stock too. Stock closed here, gap down, fell, boom. Then did it again here. Closed here, gap down, fell off a cliff, boom. So again, there's lots and lots and lots and lots and lots of stocks to look at that are gapping. There's no shortage of stocks to look at every day. There's no shortage of gaps. There's a shortage of quality gaps. There's a shortage of quality to look for that has the big power money, the huge opportunity. Because not everything is getting bought and it's going to have a big move every day. And gaps have huge opportunity because they spot the power money. So again, how do you find gaps? I developed a criteria. It's a checklist. The checklist tells you what to look for in the price of the stock. You find gaps and rate them using a checklist, and gaps have to be qualified. Again, going with the crowd always, and NVIDIA is a good example where you're like, oh, everyone loves NVIDIA. Its earnings were great and it's up a lot. Let's do it. That's not the answer, okay? That is not how you make money. There is only one thing and one thing only that can move the direction of a stock, and it's money. It's not a little bit of money, but a lot of money, or what I call power money, okay? Power money is in charge. Power money is in charge of the stock's direction. Trends are set and move with the power money people, of which there's a lot of in the market. So again, gaps happen in the market on a regular basis. However, some gaps are better than others, and some gaps are nothing gaps. So again, something could gap, and then I say, I don't like it, and then I won't do it. And then again, like I said, NVIDIA was a good example. Bullish chart, beautiful chart, great chart, gapped up on earnings, didn't go long it, and if I had, I would have lost, actually, okay? So I'm glad I didn't do it. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power money will flow to pay you. So again, I use a 26-point checklist. I go through this as if I'm performing surgery every morning. Again, if you go in for surgery, there's a checklist. Do, and they go through it, okay? This is how I look at, this is how serious I look at what I'm doing when I trade. Why? Because I'm risking my own money and I don't want to lose it. And if I'm going to risk money, then it better be good. Do you know what I'm saying? That is how I look at it. And I'd rather not trade than take something that's crap. And yet, if I see something that's good, again, that BA was really good. But if I see something that's good, I say I have 100% conviction, then I'll go hog wild in it. I'll do a day trade. I'll do a pet. I'll do a couple trades in it. I'll do a bunch of different strikes. I'll hold it, okay? I'll take more risk. But again, the key to profits is power money. And that's what I'm looking at. That's what the criteria tells me. When you think about it, you're thinking about it intellectually. You're like, okay, well, this totally makes sense. Go with the big money. Go with the power money. I don't trade low float stocks or penny stocks or cheap stocks or stocks with no volume. You're not going to have a hedge fund buy something like that. Again, I was telling you how I'm not trading this week. So yes, we rallied this week. It has no meaning. I'm just going to tell you right now. This is like whatever. So don't read anything into this Monday, Tuesday, Wednesday, or even Friday trading. It's sucking in a lot of buyers that are retail traders, that's true. But you're not getting any institutional moves in this market rally this week at all. In fact, I wouldn't be surprised if we collapsed in the next 2 weeks. Well, maybe we'll make new highs, I don't know. But I wouldn't be surprised if all of this is wiped out in the next 2-3 weeks. So when you think about it, just seriously, just common sense, it makes sense that you should be trading on the side of power. So pinpoint the direction of power money by reading price, and that will help you see what's happening. And again, what does selling look like? It's a big fat red bar. We got a lot of them here. That was a PLTR. There's some more. Close here, gap down. This was Meta. Closed up here. Again, expensive stock, over 750. Could have bought a put in it. Gap down here. This is crazy. Gap down here, almost 100 points. Fell off a planet. Look at it. Boom, 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 boom. Came all the way down, broke 600. This is crazy. So from the day before, this had earnings. This was an earnings gap. From the day before, this was the day before Halloween. It had earnings. Look at it. It lost 160 plus points. This is just like in 2 weeks. So that's a great example, again, of what? Selling, okay. So before that, before the earnings here that we had buying, just want to show this here. So this was buying. We had a gap up here at 720, and it took it up here, but it didn't last. And again, market, shorting the market here, close here, gap down, fell, close here, gap down. Anyways, it's easy to press the button when you know what to look for. When you have conviction, it's very difficult for people when they don't have conviction to press the button. Or people, what they do is they chase it. They'll see PLTR and NVIDIA sell off. It'll have made, 70% of the move. They'll jump in late, then it'll flip, then it'll bounce. They'll have a crappy entry. They'll jump in it late, then they'll kind of scalp it, or they'll make a little or lose a little. They never really get the good entry. I'm in these stocks. I'm in these trades very aggressively. Very aggressively. I'm almost in these shorts at the high of the day. You know what I mean? So again, I'm aggressive, but I have it all prepped out, all worked out, all situated before the market even opens, knowing what I want to do and knowing what I want to trade. That conviction of the rating system that I'm using to make the determination of the direction helps me make money. When a lot of people are floundering or trying to figure out what to do or waiting for the market direction of the day or waiting even to take a trade till after 10 o'clock, or like I said, jumping in late. And you need to have conviction to make money. You need to have conviction to make a lot of money. But even if you have small goals in a small account, you need conviction too. Because if you have a small account, then you really got to be careful. Do you know what I'm saying? Then you almost have to pick even more quality trades. Do you follow what I'm saying? So if you want to trade effectively, you cannot go with a crowd of day traders. And unfortunately, a lot of people are, like I said, been buying the dip all year. It hasn't been working the last several weeks, and it's not going to work between now and the end of the year. And people are going to get burned. So my edge is really looking into stocks ahead of time, way before the market opens, and making the decision what I want to do ahead of the open. And also shorting, because a lot of people don't short. I'm very good at shorting. And again, I'm good at the fast trades. But earning power is extremely important, because even if you have a small account, like I said, you could grow the account and grow it up to a larger account if you know how to trade. If you have a lot of money, you'll lose it if you don't know how to trade. So everyone says, well, if I had, $500,000, I could do this, I could do that. Yeah, but if you don't know how to trade, if you don't have a good trading system, you'll lose that $500,000, and you can lose it very quick. Trust me, I've heard horror stories from people. So the knowledge and information you gain in my class to learn what to do, how to make the pick, is invaluable, whatever size account you have and whatever amount you want to risk. Okay? Any questions here so far? How are we doing? We good? Okay, keep going. Okay, getting back to what I was saying, if you want to consistently make a lot of money in the market, the only way that's going to happen is, number one, you need a high winning strategy. Number two, you need good money management, okay? And number three, you need a good mentor to follow in the live trading room. So I run the room, I call the trades, and I'm doing them with people live. And if you join, you're in the room, you're doing the trade with me. You decide how much you want to risk, okay? But I'm calling the trades live. And if you go to my YouTube, you can watch a bunch of trading room videos I have on YouTube. And again, I'm very fast. We're doing the shorts. We're in and out quick, because time of the day is key. Between 9:30 and 10 a.m. is a critical time to get the fast trade. So I'm trading on the 1 minute chart, but I'm developing and understanding and making the choice for the trade decision that I'm doing in the stock pick on the daily. I find that the morning is a very important time to trade. That's where you get most of the moves and the biggest moves. And again, like I was saying, the benefit is that you can trade from home. You can be anywhere in the world and do this. And it's very interesting. There's so many people that are interested in investing and trading the U.S. stock market from other countries. The U.S. stock market has rules. It has set hours. There's so much volume. There's so much volatility. There's a lot of money in the market. Everybody wants to be on the U.S. stock exchange. So again, people want to be invested in the market, and the market has had, quite a ride, the last 12 months. Even if you just go back to, it's over a year since the election. Just go look at where we were since the election last November. It's hard to believe, but the election was only a year ago. And here we are. It's almost a year, and look at the move that it's had. Someone's asking the cost of my program. I'm going to get to that in a minute. So the class is called the Golden Gap Course. The Golden Gap Course teaches a 26-point rating system to find the stock to trade each day. The course also teaches how to enter and exit the stock on the day. The course teaches price analysis and technical analysis on an advanced level. It teaches one solid strategy to trade gaps effectively by reading the side of power in charts, and it teaches how to read support and resistance to take positions in the right direction. It teaches a more proficient and advanced way to read charts focusing on technical analysis and gaps, and it teaches how to get conviction in your trading in the market as a source of wealth by trading with the side of power for consistent profit. So even if you want to trade and do swing trades, you're still better off actually doing the gap system for the long-term trades. But for me, it's about income generation. I say chunk it out. You take the trade, get the move, get it out. Whether you take 500 shares, 1,000 shares, 2,000 shares, you've got to have conviction no matter how much money you're risking. And again, if you don't know why you're taking the trade, or you can't tell me the direction the stock's going to go, and you can't tell me, the target, you shouldn't be doing it. You could say, well, the earnings were great, or this, that with the Fed. No, that doesn't necessarily add up, because if it was that easy to trade, then everybody would just go long every time there was a good earnings. It doesn't work like that, okay? So again, if you're one person and you want to do this, you can open up your own account and go trade wherever you want. If you want a referral, give you a referral. I teach people my system in a class, okay? So I empower people to trade themselves. And you've got to empower yourself to trade too. And remember, if you pay for a program, you're investing in your future. You're investing in yourself. Again, it's the holidays. I know we're buying gifts for other people. I've already started Christmas shopping. And yet, you know what? Black Friday this Friday. And I'm like, okay, what do I need anything for myself? Do I need anything for the house? Do I need some other things? We can buy gifts for ourselves too. And education is a gift to yourself because you're investing in yourself and your future for 2026 and beyond, for a method to trade. Because if you don't have one, if you don't have a focus, if you don't have a system, you're not going to be successful. Or if you have one now and it doesn't consistently work under any market conditions, you're not going to be successful. A lot of retail traders made money in the uptick from the April drop-off, then when Trump stopped the tariffs, when he paused them, just buying every dip from April, May, June, July. That is over, people. And even though the market's still bullish, that is over. If it was that, easy to just make money, we just buy every dip. But it's not. There takes some knowledge and information, and I think people got lucky this year in certain periods going long. Here's some testimonials. What else? Okay, so the class is called the Golden Gap Course. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Cost of the class is $6,999. Someone just asked about that. That's how much the class is. It's December 13th and 14th, 9 a.m. to 5 p.m. Eastern Time, last class of the year. If you want to sign up, you must email me for sign-up forms at melissa@thestockswoosh.com. Now, I am doing Black Friday sales. I live in New York. The Thanksgiving Day parade is tomorrow. Macy's parade. It's a 99th parade. It's going to be fabulous. I think it's going to be a nice weather. But I'm doing 2 specials for Black Friday. Lot of bonuses in this. So I have a bundle, which is normally $8,999. The Black Friday sale is $79.99. With that, you get 3 classes, the Golden Gap, the Trends, and the Options class. You get the $1,000 off, which is a Black Friday special, and you get the room and the newsletter and the market report to the end of 2026, which is a huge, long time. So basically 13 months. You sign up now, start trading with us Monday. And you get 2 one-hour mentoring sessions with me. This is the Black Friday bundle. Then I have a combo, which again is normally $79.99. It's $69.99 for Black Friday. It's $1,000 off. You get the Golden Gap course, the Trends class, and then you get all 3 subscriptions free till the end of next year. So basically, you get all my trades for 13 months free. So this is worth it. And you do the class, and then you get the Trends class, which is good actually for options if you're going to trade options or swing trades. So that is the cost of the classes, and I am doing Black Friday sales that end on Friday. Today is Wednesday. So if you want to sign up, you email me. And any other questions? Here's the information. If you want to email me, melissa@thestockswoosh.com. Again, this is the bundle. What else? Listen, be careful. If you're trading this week, which I would not do, I'm not trading this week, I would be extremely careful. Again, I think the market's just going to go into the doldrums the rest of the day today and have like next to no volume on Friday, in my opinion. But it is going to be a good December. It should be a volatile December. It should be exciting December. Again, it's going to all be about the Fed, economic data, and what the Fed decides, you know. Any questions from anyone? If anyone is interested, again, you can email me at melissa@thestockswoosh.com. Any last minute questions here? I think I'm good on time. Listen, happy Thanksgiving, everyone. Happy Thanksgiving. Thank you for having me. You're welcome. Any last minute questions? And watch the Macy's parade. 99th parade tomorrow. So next year's the 100th. The 100th parade. Tomorrow's the 99th. It's really something. Listen, have a wonderful day. You're welcome.